back into markets here and talk about not just what's affecting them today, but looking ahead, particularly at the presidential election. It seems as though the Wall Street tide is turning in terms of predictions of who is going to be the next president. Just to give one example, there was a Citigroup poll of about 140 fund managers that was released last week. 62% of them now expect Joe Biden to win the presidency. 70% of them had expected a Trump presidency once again when they took that survey back in December. Let's get some more clarity on what that could mean for markets. Michael Arone is joining us now via the phone. He is State Street Global Advisors Chief Investment Strategist. Michael, it's good to talk to you. And you came out with a recent note where you talked about the possibility of higher taxes. This would be presumably under a Joe Biden presidency. That couldn't happen quickly, one would imagine, while we are seeing this economic struggle. So how are you thinking about higher taxes and what effect that could have on the markets?
Well, I think it's interesting. I think one of the things that is underappreciated about the long-term bull market that we've experienced for a while up until the coronavirus was that we had stable and or falling tax rates kind of across the board. Dividend tax rates, capital gain tax rates, corporate tax rates. And even though it's more likely that taxes will rise under a Democratic leadership, Joe Biden potentially, they're going to have to rise no matter what to address what are now ballooning debt and deficits that are now the result of all the fiscal policy and monetary policy that we've seen. So regardless of whether you're a Democrat or a Republican, at some point in the future, this tailwind for stocks is likely to shift to a bit of a headwind, and taxes are likely to increase. And so Biden in particular is threatening to raise the corporate tax rate. That's only happened twice in the last 80 years. It's highly unusual and could reduce earnings by upwards of 8 to 9% next year. And there's certainly a number of other kind of increases in tax rates that are on the table with a change in U.S. leadership.
Adam, it's your turn to unmute.
It's that time of day.
Yes.
Michael, Gary Cohn was on our program 2 weeks ago, and he said that corporate taxes could be raised to 28%, and that's what everyone is saying that Mr. Biden's talking about. But how realistic, whether we go there or not, is it for there to be a tax increase in the middle of a recession? Not really good economic policy, is it?
So I think that is the key question. Will Biden, in fact, should he win, follow through on his promise? And what's interesting is last week at a virtual fundraiser, Biden suggested that regardless of what was going on in the economy, that he would likely roll back many of the Trump tax cuts from the end of 2017 or early 2018. And he kind of suggested in jest that many in the audience wouldn't like it. So is this something to appease some of the fiscal hawks or some of the more moderate Democrats from an election standpoint, or will he in fact follow through on his promise? I do believe that higher tax rates as early as 2021 are much more likely under a Democratic leadership, and I think the corporate tax rate is probably the area that they will target most. And so from my perspective, that could weigh on profit margins, which have already been declining since 2018, market multiples, which are already quite high, and overall earnings growth in particular. So it could be a risk to market returns moving forward.
Michael, Dan Roberts here. Separate from just corporate tax policy, there was a sentiment that Biden, or really whoever would be the Democratic nominee, would be bad for markets. That was, the kind of the general consensus for a few months there, that anyone other than Trump, you would see kind of a big downturn for stocks. Now it feels like the general sentiment on that has shifted. I don't know if that's because of COVID-19 or what, but what's your general sense of the temperature here in terms of what markets could do kind of immediately if Biden wins the election? So
I think Biden as the presumptive nominee is certainly more in the moderate space compared to choices like Warren, like Bernie Sanders. So I think markets were a bit more comforted with that result. I also think that some of the lazy thinking is Republicans are for less taxes, lower regulation, more business friendly, and Democrats are kind of opposite those things. I think that's a kind of a lazy thinking from that standpoint. And you're likely to see what's happened is that even if you see a change in leadership, it's likely that the Senate, should it swing, would only do so by a couple seats. And similar to what Republicans face today, without 60 votes in the Senate, the Democrats wouldn't be able to pass their most sweeping progressive agenda. So I think investors are comforted, even if you were to get that blue wave, that sweep in November. There is a limit to how much Democrats will be able to get done, and Biden's considered a more moderate choice compared to Warren and to Sanders, for example.
Michael, all of this said, I would think it's fair to assume that the rally that we've seen in stocks, the recovery we've seen in stocks is somewhat fragile, right? So even if, as you say, Biden's viewed as a moderate, some of these risks out there are not seen as enough to derail the market, it's fair to assume that we're going to see some volatility hits as we get closer to and even beyond the election as a result of these issues.
I think there are a number of risks on the horizon. We've been suggesting, for example, after what was a very strong rally, one of the strongest, depending on when you want to mark it, since 2009 or even back to 1982, in terms of very quickly, very far, very quickly. So to me, the blue wave is a risk. Certainly, rising tensions between the U.S. and China has been a risk. Opening up another trade battle and a broader trade conflict with Europe, for example, on the digital tax is a risk. Fiscal failure is a risk. And certainly what we're seeing as it relates to COVID-19 in terms of the rise in cases, that doesn't necessarily concern me as much as the potential for this to weigh on a very stressed healthcare system already in some of those hotspots. So I think those are the 5 risks that are likely to keep this market somewhat volatile and range bound, at least through the summer.
Michael, on that last point, especially with the COVID-19 risk that clearly has not gone away, if anything, it's been exacerbated over the last couple of weeks. As you say, states like Texas are now seeing what New York had seen early on. When you think about a potential new administration coming in, how do you anticipate the rhetoric and perhaps a more consolidated leadership actually impacting this country for the better? Do you feel as though a potential President Biden would be able to actually get a handle on the virus, or do you feel as though it's just kind of the nature of the United States of America?
Well, I think that things are pretty divisive in politics right now, perhaps as divisive as they've been for a while. But I am encouraged by the fact that it does seem like when push comes to shove, Republicans and Democrats can find common ground. So, for example, I think it's going to be very tenuous, and you're going to see lots of headlines. And to Julie's point, I think those are going to swing markets, and they have a very narrow window to pass this fiscal policy package. But at the end of the day, I think that they will find common ground to push forward a fiscal policy package before the August recess. Similarly, to your question, I think that Biden would also be able to push forward some measures in order to keep the economy on track. And that's why I think Adam's question is kind of interesting, right? Will he have the gumption? Will he have the guts to raise taxes if the economy is continuing to be somewhat uneven? And that is a big question as investors kind of look towards post-election headlines.
Yes, and one to definitely keep an eye on. Thank you so much, Michael. It's good to talk to you. Michael Arone is State Street Global Advisors Chief Investment Strategist.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.